Hello dear algorithms traders. In today's post I will show you my approach to trading, how I combine the data from the stock exchange and futures market, and how I can reconcile chart technology, technical and fundamental analysis, and algorithms trading. We look at what measures I can use to identify the invisible price zones of the big players with a very high probability beforehand. All these factors intertwine to achieve an unbeatable market advantage. This makes it possible to place trades in regions where only very few are trading at this point in time. In my charts I work with technical analysis, of course also the chart technique, fundamental analysis, and a self-developed algorithm analysis. In recent years, another fifth element has been added. This means my sound analysis, whereby 8 different self-programmed tones in the 1 millisecond range are used here. First, I get an overview using technical analysis. For this I have programmed special charts in the stock market with my stock market software to show exactly the limit orders that are responsible for the future price development. These limit orders show me the current situation in the market in order to make a short or long decision. In order for trading to take place in the market at all, the big players have to take the opposite trading decision compared to the retailers. In the chart we see price running upwards again. While the big players are massively building up long positions, the retailers are positioned rather short. After I have gotten a rough overview of the current situation, I now turn to the chart technique. With the help of my self-developed Bionic Candle, I am now able to identify the invisible price zones of the big players. These invisible price zones are an essential element in determining trend reversals in advance. Let's take a look at one more example. Once the invisible price zones have been identified, it's time for fundamental analysis. In the currency strength, the 7 most important currencies are calculated against the dollar and euro and thus show very precisely whether the euro or the dollar is currently stronger. This consideration helps just when you are in a trade. In order to look deeper into the eye of the tornado, I developed the algorithms analysis. The strength of the market and limit orders is viewed and evaluated using different approaches. Another important element here is the pulling and stacking, which gives me very helpful information. This puts me in a position to realize the optimal time for my entry. The fifth element relates to the sound analysis. This sound analysis was developed by me to get even more in-depth information about entry and exit. In addition, I have developed the pip value per minute, which shows me exactly when the optimal exit time has been reached. We've talked about this pip per minute value a few times before. You can find information about this in my numerous videos. First of all, on my main chart we can see that 87% of all data is generated from the futures market and only 13% from the Forex market. This is also because you get more information in the stock market. In addition, we recognize that the algorithm analysis also makes up the largest part of my charts. In the Forex market, the chart technology with my self-developed Bionic Candle is in first place. We will now take a closer look at why this is so. A very important element for me is the Bionic Candle I developed, with which I am able to identify the invisible zones of the big players. A candle consists of price and time. Time is a fixed factor while price is variable, which is why a candle is always generated randomly. This means that there are no clear pattern sequences within the candlesticks. So the candlestick formations only emerge randomly. A trader should always base his trading approach on high probabilities rather than chance. The big players are the only traders moving big markets. They work with algorithms that make it easier for them to control individual market and limit orders. These algorithms are very difficult to program because they have to ensure communication between the individual order types. There are algorithms that scan the market for specific anomalies, such as hidden stops, and there are algorithms that trigger specific trading strategies. In the event of a breakout, market orders are fired into the market, and at the same time, the limit orders that would be holding up your own market orders are withdrawn. In order not to have to program new algorithms every day, the internal processes within the algorithms are retained. For this, the big players on the market create invisible price zones that are simply shifted depending on the situation. This means that the algorithms can only be moved to another price level and continue to follow their programming. The Bionic Candle was developed exactly for this and indirectly follows this institutional trading approach. This makes it easier to identify these invisible price zones of the big players and determine possible trend reversals with a higher probability. The Bionic Candle shows the candle strength more accurately than the candle charts, and unclear prices are presented better. This also saves considerable time. By making the invisible price zones visible, clear entry and exit points can now be defined in advance in the chart. These invisible price zones can be significantly reduced on the tick chart, reducing stop loss, increasing CRV while reducing risk. Many indicators can be dispensed with as they only follow the price chart and are therefore slower. As a result, you are less distracted and the screen is not unnecessarily cluttered. Anyone who identifies the invisible price zones of the big players has a clear trading advantage over most market participants. That alone is a good reason to take a closer look at the Bionic Candle. Incidentally, it is also currently being developed for the stock market. First, let's take a look at the Euro-US dollar H1 to see how the big players shift their invisible price zones over time. Here we see a strong key candle, and whenever the price enters this zone we see it being rejected to the upside. Now we see the price going down and this candle breaking the price zone. However, the price is not going down as it is a fake breakout. Only this candle properly breaks the price zone, because after that the price continues to fall. So this is a key candle and we are going to draw it now. The zone is drawn, we see the price going down first, and once it gets into this zone it always rejects down. Now the price is moving up and we can clearly see this candle breaking through this price zone as the price continues to move up after that. And that's exactly why this is our new key candle. The price is going up, and although the price is going down again, we see that it is rejected in the up zone. Only this candle breaks through this zone and the price keeps falling, so it will now be the new key candle, which of course we also sketch in. Now here we see that the new zone has been drawn in, the price is running down, and once the price enters the zone, it is rejected down. The price goes up again and again, it is rejected down again and again. Then the price breaks through this crucial upper zone but goes all the way down again. And here outside we see the new key candle breaking the zone all the way up as the price continues to move up after that. The new zone is drawn in and the price increases. This is where the price comes into this zone for the first time and is rejected to the upside, as here. Now the price is running down sharply and we can see the lower candle breaking through the critical zone, which will now be the new key candle. The new key candle is sketched in, and as expected, we see price rejected down again and again. Ultimately, the price continues to fall. This price zone will now remain in place until the zone is breached at some point. Now going back to H1 on June 18, 2021, we see a kind of equilibrium here where the price keeps getting rejected down, and here is the crucial key candle running up. First, the price goes up a bit, comes back into that zone, and then goes back up. At this point I would not place a trade and wait for the price to return to this zone from above. Here I would take a long trade up. Further down the price we see that the price is rejected again here, but the zone has already been breached here. In this respect, this zone is no longer active for me. First, we see an equilibrium here and a breakout candle in this area. Now we would call this candle our key candle, but that is not correct. The reason for this is that our previous key candle is in this area and we need to see which key candle breaks the old key area. And that's exactly this key candle right here. Conclusion: this is our new key candle. First we wait again for the price to leave this zone and come back into the zone. Here we can make a short trade, just like here. Now we are seeing this key zone being breached somewhat. That said, initially this is our new key candle, but it will be removed immediately. Here we can already see that this is our new key zone. At the top we see an equilibrium here, and here is the corresponding key candle, which we also plot on the chart. We wait for the price to run out of this zone, and as soon as it comes back, we see that the price keeps rejecting upwards. Now the price breaks through this zone but rises again, and we can see that this is the key candle as the price then goes down. We are now plotting this key candle on the chart, and if we go back in time, we can see that this zone has worked twice. On July 13th, we see a strong key candle moving down. The price first runs out of the zone and then returns to the zone. There we can place a short trade. Then, in this strong down move, we see another key candle, which I also draw. I call this zone the iron core because it is particularly strong. At the bottom we see a key zone that is from the past. Again, there is another important candlestick that I drew on the chart. Now, if we extend the subordinate key zone, we see a strong iron core here as well. This key small candle breaks the stronger lower zone and the price continues to move higher. This makes it my new key candle and I can trade long this zone twice. From the past comes a zone that is breached here for the first time. This candle is a key candle in the short term but is being taken out. So I draw a new zone here. We can see that I was able to make 3 short trades in this zone. The lower zone is now being broken and we see a new key candle here, which we also draw. The rising price is now maintained and then the price falls. Again, a key candle is created first, but this can only be worked out from the previous key candle if we go into smaller units of time. Here we see other zones created using the same principle. The yellow line shows a strong bearish zone breaking through this bullish candle. In a smaller time frame, we can see that this bearish candle is now the new key candle. Now let's pay attention to the lower yellow line, which is rejecting the price to the upside. It is broken by this bullish candle, making it the new key candle. Now we come to a mistake many traders make in the beginning. We see that in this equilibrium here the price keeps being rejected upwards. Now we would call this candle the key candle, but we see that the price is not coming into the zone here. Why is that? First we need to go back in time and see that this is the key zone. Which key candle breaks through this key zone? And that's exactly what our new key candle is. The other zones were drawn according to the same principle. Here we now see a very strong equilibrium over 23 hours. And right here is the key candle that will give us 3 nice short trades going forward. The current situation looks like this, whereby I assumed that the price would continue to fall. Now that we have some ideas, we can try to draw these zones ourselves. It gets interesting when you go into smaller time units to reduce the zones. In the past I've gotten tired of just guessing if a price is going up or down. Since I've been working with the Bionic Candle, my probability of winning has increased drastically. Of course, the combination of my 5 elements related to the Forex and futures market is a clear market advantage, but market participants who work without stock market data are also able to significantly increase their profit probability with the Bionic Candle. At Forex Factory you will find all the information you need to work with this candle in the long term. The Bionic Candle is also being developed for the future market. I will keep you informed. I wish you a great week and continued success in trading. Best regards, Michael.